Let's move on and talk about something that I think is really wrong, and I want to talk about inheritance tax. And I'm delighted to be joined by Dr. Roger Gewolb, who is here in the studio. Very good morning to you.
Good morning, both.
And you were saying you watch this show.
All the time.
Really?
I've been on with you many times.
You have,
and on the other side of the camera, I watch you and I read the Twitter feed about how people... I don't know anyone else on television so beloved by the audience.
Oh, but you are kind. Obviously, you're reading my Twitter feed.
David and the wife flew in and all. They love it.
Well, that's very kind. I want to talk about inheritance tax this morning, if we may, because the rules around inheritance tax, many people feel they're very draconian. They feel they're unfair. Also, the rate has been frozen for a very long time. I'll let you explain exactly how this works. And of course, we've heard repeatedly about the band where it would start to apply would be raised. We heard George Osborne raise it to £1 million. There is a lot of talk about whether Rishi Sunak will do this. And actually, in terms of the government coffers, it doesn't bring in that much money, but I think it would be a big electoral hit. So could you just explain, first of all, for the maybe the less economic amongst us, and I'm looking at myself here, how does inheritance tax work, firstly?
Well, inheritance tax was originally meant, David, to tax the rich, the very rich, so that they shared some of their wealth from their estate when they died to, fill the coffers and pay for the public expenditure. But as you say, it's been frozen. It is one of the many, many stealth taxes that we have. Jeremy Hunt is the king of stealth taxes. The ones he introduced recently are just ridiculous. And a stealth tax is basically where they don't raise the tax rate. They don't actually make tax more expensive. They widen the net so more people fall into it, and they extend the band so those people have to pay more. So the tax take becomes very great. But as politicians do, they can turn around and say, hey, we haven't raised taxes in 5 years. But actually, they've taken a huge amount of money. So
you have an allowance. Now, that's currently $325,000, isn't it?
Correct.
So that is for one person. Then on top of that, well, just explain what happens if you're in a civil partnership or indeed if you're married.
Yeah, well, I mean, it has been frozen, as you say, for years. So as things have increased in price and people's estates have grown larger, that $325,000 hasn't moved. So more and more people are paying more and more inheritance tax.
Well, we were saying that actually properties, many people in modest properties will be over that kind of level.
Unbelievable, unbelievable. So what we're talking about here, what you asked me to speak about, it's not actually a loophole. It's not actually a hack.
Yeah.
It's simply a kind of arcane provision of the law. And first thing I would say is don't try to figure this out yourself. This is so complicated. It's worth getting a lawyer or an accountant.
Which is better?
In this case, probably the lawyer who's doing your will. I'd get the solicitor who's doing your will. The second thing is, this doesn't apply to people who are quite well off or rich. If you have more than £2.7 million in your total estate, this isn't going to help you all that much. Ditto if your property, if your home is worth more than $2 million. There's a lot of different exemptions. This is for the average Brit who lives in a house that's worth £300,000, who has an estate, maybe £500,000, £600,000, £800,000. You can actually save another £175,000 per person on your inheritance tax. So that $325,000 becomes $500,000, $500,000.
And how do you do that?
It's there. It's called the family allowance. And what you do is that if you give your home, your principal home, to a direct descendant, your children, your grandchildren, your adopted children, your foster children that you adopted, etc., 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 whether it's a marriage or civil partnership, but in civil partnership only since the civil partnership laws came in, if you give it directly to a direct descendant, as they call it, then you can claim another £175,000. So George Osborne actually never finally legislated the $1 million that he wanted, but the way it exists today, it does add up to $1 million.
So the reason for that is because you, as an individual, say, have a 325 allowance.
Right.
If you die, your spouse can take your 325 and add it to theirs,
well, that's the next thing, yes. Right. That if whatever's not used by you goes to your spouse. So that's how you get to the $1 million. So
then we're at 650 plus the 175.
Well, no, I mean, I've got 325 and I've got a home which I leave. That's all tax-free. But when my spouse goes, she's got my 325 and hers, or he or she or they, whatever. My 325 plus 2 times 175. That's just a little over.
2 times 175.
Sure.
So when you say gift your home,
leave it in your will.
Leave it in your will. You don't mean that you have to give your home to father. So
no, that's a different tax-saving thing. Yeah.
So you leave your home to a direct family member in your will. Then they get this extra benefit of 175.
The people who write about this, Renee. I mean, I've read about a half a dozen articles before coming here last night and tonight. I mean, I thought to myself, this is like somebody who explains to me how the levers work and the cogs move and the spring mechanism moves the hands on the dial. And I go, oh my God, I only asked you what time it is. You know?
But surely most people leave their home to somebody, or do most people die without a will?
No, I think that most people have... no, I think most people die without a will still. I'm not sure.
You see, this is the thing, is that unless you know and you have a good lawyer or accountant, then they may miss out on these benefits.
But that doesn't make a difference. I mean, the point is, even if through the state, if you die intestate and it still goes to your spouse, it's tax-free. But when your spouse goes, as you say, the two add up, and that's how you get to your $1 million. So if you're single, you can actually save the first $500,000 on inheritance tax.
So that's the other point I was going to say. So say like me, you're miserably single. I only get 325 plus 175. That seems wrong.
It's a stealth tax.
But you're penalising people who are not married or in a civil partnership.
Absolutely.
But that's not right.
Absolutely. Of course not. No, of course not.
Is that right?
Oh, you know, there is a school of thought that we should incentivise marriage. That's always been the thinking behind it. It is still better and more tax efficient.
But I've already earned this money and I've paid tax on it.
Well, that's a different story, though.
Well, this is where we have the highest taxes of any European country, if I can still use that term, and we have the highest taxes since the last coronation. And we've just introduced some more. It's ridiculous. This is a government that is so tax orientated that you, as someone said, you can't slip a highly taxed cigarette paper between them and Labour.
Well, it'll give Labour a high bar to reach when they increase taxes even further.
Absolutely.
Right, so you've got all of this, but you can also gift, can't you, as well, to try and reduce your burden. But if you gift, you then have to survive 7 years.
You better be very careful you don't hop off in 7 years.
Why 7 years?
But there's more to that as well. It's not just if you gift and you have to survive 7 years. There's then a potential, I think, tax implication for you living in a house that doesn't belong to you. Are you paying rent? That kind of thing.
I'm sorry. Yeah. Careful, because one thing in our favor, one of the few gifts that we get, is that you get that family allowance of $175,000 per person, even if you don't live in the house anymore. So if you've sold the house, but you can show that it was your family home and you lived in it, you can still claim it. It's complicated, but you can do that. Not a loophole, but this is why, this is for the average Brit. This is for the, 60 million of the 66 million of us.
So I think the message here, Roger, is that people need to just take some advice, even if it's, however much it is, £300 to see somebody, to take some advice, because it's worth it in the long run. And somebody who understands it better can iron all this out for you.
Yes, my advice, to be brutally frank, would be to go to a lawyer who is going to prepare your will, and early on say, and what will we do about the family allowance? And if the lawyer says the family what, go find another lawyer.
Interestingly,
somebody who knows this stuff.
Someone's just said IHT only really is a worry to Southerners. Most of us in the North don't have estates over 500,000.
I did say that to you.
Yeah, well, but the thing is, actually,
that's whom it's for.
Pardon?
That's whom it's for.
Yeah, well, I don't agree with that. I mean, there are lots of parts of the North that are actually where houses can be very expensive indeed, and particularly if you bought them very early on and you've lived in the same house for many generations.
Yeah, this isn't true anymore.
It isn't true.
No, but if you're worth quite a few millions, Remember, this is only 175,000. It's no more than that. Might not matter that much.
So the much bigger question for me is, why don't they abolish it altogether? Because it seems to me iniquitous.
And it doesn't collect that much, as you said.
It doesn't collect much revenue. And actually, lots of countries don't actually have it anymore. Estonia and Latvia, they never taxed inheritance in the first place. And 10 OECD countries have got rid of it.
Well, all I can do is invite you both to join my campaign for common sense in government, which will probably never happen, but...
well, those two words do not go together.
Oxymoron.
Sense. Yeah, they're oxymorons. Common sense and government.
And I think that the other message from this is for people to do a will. It doesn't matter how little you think you have.
Absolutely.
Do a will. And actually, even if you don't go to a lawyer, you can buy a will.
No, please, no.
Well,
not a supermarket will, no.
I know.
Why not?
Well, because you'll miss all these important points.
You will, I agree. But
you just said it, spend a couple $100 and get somebody...
But if people haven't got a couple £100, it's still better for them to have a will than not.
Okay, sure. If somebody doesn't have a couple $100, then they don't have the kind of assets that's going to matter here anyway.
Well, that's not necessarily true. I mean, I know old people living in £1 million houses who don't have a bean at the end of the month.
Well, that was the point I was trying to make.
Because they've inherited it and it's grown and grown and grown, but they have very little disposable income.
Equity release.
Yes, is that a good idea?
Sure.
Because I see all these adverts the whole time.
Sure.
I'm just always deeply worried that people then think this is a great idea and you're being fleeced.
I don't think you're being fleeced. I think there is a trade body for the equity release people, which keeps them, in line, pretty kosher in their operations. And if you borrow a reasonable amount on your... I mean, if you're living in a home that's worth £1 million and, you have to... you can't buy Heinz beans, you have to buy something generic, then for goodness sake, go borrow 50,
sure.
£100,000. It does bear interest, and today it's going to be about 5 or 6%, maybe even more. But if you eat up all the equity in your home, it's generally not your problem. If you end up owing money when you die, it's the insurance company's problem.
Exactly.
So for somebody in those circumstances, I think it's not a bad idea to investigate, again, with a professional to guide you.
Right, I agree. And also, just in terms of inheritance tax, I'm just reading here that half the public think it's unfair, according to polling. There are rumours that Rishi Sunak will ditch it altogether. Do you think he will?
I just think...
Before the election?
I think he's a high-tax guy. Yeah. I think he was high-tax chancellor. I think he's a high-tax prime minister. I think that all these taxes and everything else, corporation tax increase 1/3 at a time like this, which is insane, and is going to fall back on us because people will raise their prices. My personal theory is it's all to build up a war chest of cash to do exactly what you said and make huge tax cuts just before the general election. Whether this will be one of them or not, maybe not, because as you said, it doesn't bring in enough revenue.
It doesn't bring in much revenue, but also it will give Labour a stick to beat them with, that they're once again rewarding their wealthy friends.
Well, I've just had a message, actually. This has come in. Hi, David. I'm single. I'm a divorced lady. It's totally unfair to only have $325,000 to leave tax-free. My house cost me $240,000. Today, it's shot up to $659,000. And that goes back to the thing about whether single people should have a lower allowance.
So she's going to pay 40%,
right,
100 and whatever it was.
And it's not her fault that her house went up.
No.
Is it?
And she bought it with taxed pounds anyway.
That's the point. She's already paid tax on it.
The flip side of this argument, what people would argue is that is money that she hasn't earned and paid tax.
And by the way, she's in Cheshire, so that, goes back to I'm in Cheshire, parts of... Yeah. This is the point I'm trying to make. It's not a southern problem. But the point, your take-home message, Roger, is get help. Get professional help.
Get professional help.
Regardless of how much your house is worth or whatever.
Look, everything is relative. People in America are amazed that when you own a business and you own the building you're in, that you can't depreciate it, write off 10% of it a year. Do you understand? If you own an office building for £1 million, in America, you can take £100,000 against your business's income every year. You can't here. We're amazed here that in America, and the Americans go, what's strange about that? When you sell your PPR, your principal private residence, your home, you owe 24% tax.
Wow.
Yeah.
That is well,
wow,
yeah.
Amazing. And of course, then there are all these exemptions. If you have a working farm, you don't pay inheritance tax, do you?
In this country?
Yeah.
That I don't know.
I don't think you do.
Okay.
I don't think you do. Anyway, Roger, always really good to see you. Thank you very much indeed. That's Roger Gewolb.
Renee Google's farms to buy.
Yeah. You have to work it, I think. I'm pretty sure I'm right on that. Personal finance expert and also CEO of fairmoney.com.
Thank you very much.
Very much indeed. Keep all of your messages coming in, please. This